Hi friends, Namaste. I am Chandrakanth. Welcome to Mr. Chandrakanth YouTube channel. In this video, we will learn about what is accounting cycle, what are the steps of accounting cycle with examples. So by using accounting cycle only, we will prepare the financial statements. So friends, please watch until last minute. You will get some knowledge of accounting cycle and steps of accounting cycle. So first one is accounting cycle. So accounting cycle is a accounting procedure starting from recording of a business transaction and ends with final preparation of a financial statements. So in accounting cycle, starting of recording of a business transaction and ends with final preparation of a financial statements. So it is a step-by-step process of accounting. So accounting cycle is a step-by-step process of accounting, recording of a financial transaction, maintaining of a financial transaction, and reporting of a financial transaction. Accounting cycle is a step-by-step process including collection of a transactions, recording of the transaction, maintaining of a transaction, and reporting of a transaction. So the accounting cycle will start with collecting of a business transaction and ends with final preparation of a financial statements. So the accounting cycle process can continue in whole financial year as long as company business continues. So steps in accounting cycle with examples. So we will discuss the steps of accounting cycle. So by using this accounting cycle, so we will prepare financial statement accurately. The first one is collection of a transaction. So in accounting cycle, the first step is collection of a transaction. So every business involves various types of business transactions on daily basis. If you have a business means in daily basis lot of transactions will happen. So lot of transactions means including purchase of goods, sale of goods, expenditures incurred on purchase of inventories or stationery expenses, and banking transactions and cash transactions. So these are the business transactions in company. So these transactions we need to collect by using invoices or bank statement. So all these business transactions analyzing and measuring and recording in book of accounts. So by collecting these transactions from invoices and bank statement. And second step is recording transactions into journal entries. So after collecting the transaction, next step is recording the transaction into journal entry. So how to record the journal entry means we need to record debit and credit entries in journal account. Suppose the transaction, the goods purchased for cash. So the transaction is goods purchased for cash. So we purchased goods and we paid cash. So in this transaction, two elements is there. One is debit entry and another one is credit entry. So debit entry is purchase of goods, credit entry is cash payment. So when it is purchased, suppose we purchase 12th December 2022 means, so the purchase date is 12th December 2022. The transaction date will mention in journal entry. So the transaction entry we need to mention, and debit entry and the credit entry we need to mention along with transaction description. The transaction was purchase of goods. So we need to describe the transaction being the transaction purchase of goods. So we need to mention the in description. So after that, post journal entries into ledger account. After preparation of journal entries, those journal entries we need to post in ledger accounts. So these general ledger accounts are very important accounts to be the financial statements. So each general entry will have a journal ledger account that is posted to on ledger accounts. So example, suppose if you purchase goods for cash means transaction, two elements is there. One is purchase of goods, another one is cash payment. So in two accounts is there. One is purchase of goods means that is the purchase account. Cash payment means that is the cash account. So we need to segregate the ledger accounts. So after preparation of ledger accounts, so now we will prepare an adjusted trial balance. So the trial balance are the sources of preparation of a financial statements. The trial balance is the primary source of preparation of a financial statements. So before adjusting an account, how we will prepare trial balances means by using closing balances of ledger accounts, general ledger accounts. By using general ledger closing balances, we will prepare adjusted trial balance. So this adjusted trial balance must be credit and debit. So both debit and credit should be equal. Both debit and credit balances should be equal. So after the preparation of a adjusted entries. So after preparation of adjusted trial balance, we need to adjust the entries. So the trial balance and preparation of a final balance that calculated in general ledger accounts. So by using general ledger accounts, we will prepare trial balance and preparation of a final balances. So after that preparation of a adjusted trial balance, after preparing adjusted entries, after that we will prepare adjusted trial balance. So after successful preparation of a journal entries and adjusted entries, it's good to prepare. So it's a time for preparation of another new trial balances. This is called adjusted new trial balances or adjusted trial balance. So this new prepared adjusted trial balance can be used for preparation of a final statements. So by using this adjusted trial balance, we will prepare final financial statements. So the last step is preparation of a final statements. So after successful preparation of adjusted trial balance, we will prepare financial statement. By using adjusted trial balance, we will prepare financial statements. So this is the important step and final step of accounting cycle. So in financial statements, by using this trial balance, what are the financial statements we will prepare? So what are the final financial statements means balance sheet, income statement, statement of changes in equity and cash flow statement. So by using adjusted trial balance, we will prepare final statements. Those are balance sheet, income statement, profit and loss account statement, equity statement and cash flow statement. So by using these financial statements, so we will know the exact financial position of a company. So by using these financial statements, we will know the financial position of a business. So this is called accounting cycle. We start with finding of a transaction and ends with preparation of a final statements. So friends, I hope this video will help you in future also. Thank you.